I want to welcome you to Financial Training for Business Owners. Today, we'll focus on multiple ways you can lower your overhead cost. We're going to continue to look for new ways to cut your cost, since we know that for every dollar we find in cost reduction, every cent of that goes directly into your pocket. So in this session, we'll show you multiple ways to lower overhead, how to lower your supplier and vendor cost. We'll reveal to you the secrets of outsourcing, and is it better to lease versus own? And listen to this. We want to explain a legal loophole for U.S.-based businesses that can save you tens of thousands of dollars per year, along with various hidden deductions you're definitely overlooking. This session will be a virtual goldmine for your business. So let's get started. As we previously explained, there are only three numbers that you really need to focus on in any P&L statement. They're the ones highlighted in red: revenue, COGS, and overhead. Now, the reason these three are so important has to do with the simple fact that these are the only three numbers in your P&L that you can directly impact. The remaining four numbers are all determined by these three. You find gross profit by subtracting COGS from revenue, and then dividing that number by the revenue gives you the gross profit percent. When you subtract your overhead from your gross profit, you find your net profit, which you then divide by revenue to determine your net profit percentage. So the three numbers you can directly impact, and the ones we're going to focus on to help you make dramatic financial gains with zero cost, are revenue, COGS, and overhead. We then discuss the power of exponential growth. In this example, if we could impact these three areas by 5% each, meaning we increase our revenue by a meager 5% and lower our COGS and overhead by 5%, we would generate an additional $27,000 in net profit and at zero cost. So now that begs the question, how can we increase revenue and lower our COGS and overhead? Well, the good news is there are multiple ways to impact each of these three areas. So today, let's discuss various ways you can immediately lower your overhead cost. The first thing we would recommend when it comes to lowering your overhead is to set aside a 2-hour block of time. Find a quiet spot and very carefully review the following documents: your bank statements, your credit card statements, and your business invoices. You want to go through these line item by line item and carefully scrutinize each charge. Bottom line, if an expense doesn't help you to get a customer or to keep a customer, eliminate it. I've seen business owners discover that they have been paying for years on things they had no clue what they even were. Pay extremely close attention to the charges on your credit card statements. In fact, review them closely every month. Global fraud is rampant these days, so confirm that every charge you make on your credit card is a necessity. Next, audit your current suppliers and vendors for the products and services that you purchase daily, weekly, monthly, or annually. Audit your internet provider. I can practically guarantee that if you contact your internet provider and tell them you're thinking of switching services to one of their competitors, they will immediately offer you a 10 to 20% reduction in your monthly rate. Next, evaluate your telephone rates. Phone rates have dropped substantially over the last several years, and you may be able to save 25 to 50% instantly. Now, if your business requires calling overseas, check into a service such as Vonage, where you pay a flat fee every month and you can call literally anywhere in the world for free and talk as long as you want. Look over your invoices for your office supplies. This is an expense most business owners never think about. There's a good chance if you check out the competitors, you can get substantially lower pricing. Now, same thing with janitorial services. Instead of paying a full-service professional janitorial company, consider hiring a college student who would love night work so they can attend school during the day. A janitorial company typically pays the person performing the service just 30% of the amount they charge. The remaining 70% goes to cover their overhead, such as their office staff, their lease, their vehicles, as well as their marketing and advertising. Pay that college student that same 30% and you pocket the rest. When was the last time you audited your insurance? And not just your building and liability insurance. Be sure to audit your vehicle insurance as well, including your personal auto. What about health insurance, life insurance, and workers' comp? Insurance today is a tremendously cutthroat environment, and companies will discount to the bone to get your business. Audit your garbage pickup. Does the amount of garbage your business generate require pickup at the current frequency? Or could you go an additional 1 to 2 pickups and enjoy that savings? Don't overlook repair and maintenance, especially if you only use these services on an as-needed basis. Check to see if there are preventive maintenance agreements available for your industry or profession. You pay a flat monthly rate and all repairs and maintenance are covered. Landscaping is another area to scrutinize. Similar in nature to janitorial services, landscaping services only pay their landscapers around 30% of the money you pay them. Contract this service out yourself and save big time. Now, once you audit all of these vendors and providers and secure the lowest pricing for each, here are some additional tactics to save you even more. Ask for extended payment terms. If the provider asks for payment on delivery, inquire if they will give you terms either 30 or 60 days. Now, this should be a major consideration when negotiating a change in vendors. To obtain additional discounted pricing, offer long-term commitments coupled with quick payments. Definitely insist on this concession in the event you can't negotiate extended payment terms. And don't overlook the power of bartering. Offer to trade your product or service for theirs. If they're open to this concept, be sure to take into consideration the value of the exchange. If your product or service is worth more than theirs, then additional compensation should be negotiated in the transaction, and vice versa. And finally, offer to negotiate long-term supply agreements. This is where you offer to use a supplier exclusively for a specific period of time in return for a set lower price and better terms. The longer time frame you offer, the better the terms you should expect to receive. If you receive a deeply discounted price by offering most or all of the above, you would be well advised to lock in that discounted rate for as long as you can. Now, if you tend to keep all of your professional services in-house, consider the possibility of outsourcing those services moving forward. The most common ones to consider are accounting, bookkeeping, IT, and maintenance and repair. If none of these require someone full-time, outsourcing can offer substantial savings. You may be surprised to learn that there are highly qualified professionals in places like India, Taiwan, and the Philippines. If you're under the impression that these countries are illiterate, check out the facts. The Philippines boasts a 95.6% literacy rate. Taiwan specializes in programming and databases, and India has a world-class IT infrastructure. Another major advantage to outsourcing involves the classification of the worker. When you outsource, you can designate the personnel handling the work as contractors versus employees. This can lead to huge savings for your business. First, you often save on salary. For example, you can often hire a full-time college grad with an MBA in the Philippines for $650 per month. And since these people are classified as independent contractors, benefits aren't a requirement. So you save on healthcare, dental, 401k, and payroll taxes. If your business is struggling financially, outsourcing is an area worth considering, at least in the short term. Now, you might consider replacing non-critical positions with part-time temps. This is especially beneficial if you experience seasonal demand. Often in resort areas, businesses make all of their money in a 3 to 4 month time span. Hiring temps to assist during these peak times can alleviate stress and overwhelm while maintaining profitability. One major way to cut costs that has never failed is to offer your employees the opportunity to participate in a cost reduction program. Truth be told, your employees know how to reduce or even eliminate substantial costs in literally every phase of their job. And to ensure the success of this type of program, bonus them a percentage of the first year savings. Just be sure you take each submission seriously and notify the employees of the outcome. If they suspect this program is lip service only, the entire program will grind to a halt. And one final suggestion. Offer the landscaping and janitorial services you now contract out to your employees. Remember earlier in this session when we discussed the fact that a janitorial company typically pays the person performing the service just 30% of the amount they charge? The remaining 70% goes to cover their overhead, such as their office staff, their lease, their vehicles, as well as their marketing and advertising. Instead of hiring a college student to handle this, perhaps your employees would be interested in moonlighting and picking up a few extra dollars. In many cases, they will do a much better job cleaning and maintaining the workplace since they spend 1/2 of their waking hours there 5 days a week. Over the years, it's easy for businesses to sign up for products and services that require dues or subscriptions. Review these and cancel the ones that are outdated or no longer relevant. Remember, if an expense doesn't help you to get a client or keep a client, get rid of it. If possible, eliminate overtime. Overtime is okay if needed to catch up with demand, but if overtime is now being required every week, consider hiring an additional employee and avoid paying time and a half. You might also consider refinancing your debt to lower your payments. One recent business owner found that they had 4 separate loans with a total outstanding balance of $10,000. They were currently paying around $700 per month in principal and interest. They found they could refinance that debt at a much lower interest rate with a 3-year payment below $300 per month. And speaking of interest, review your credit card processor. Compare their discount rates with other vendors and negotiate the best rates and services. And be especially careful on hidden fees and charges that add up to substantial differences between vendors. Does your business require a significant amount of travel? Look to see if you can replace travel with video conferencing. With current technology, you can flip on your webcam, and it's not much different than sitting directly across the table from your customer. Another area to look over is your compensation model. If your business delivers a specific result, then set up a results-based compensation model. Insulation manufacturer Certainty compensates its employees based on the amount of insulation that they produce per shift. This is the preferred model for an organization that depend on sales professionals. They reward their staff when specific sales goals are met, with bonus compensation when those goals are exceeded. Now, this works unbelievably well, provided the sales goals are communicated, specific, realistic, and attainable. Now, one area that seems to baffle most business owners involves leasing versus owning. Leasing has several obvious benefits. It provides flexibility and cash flow opportunities. There's no huge initial investment. Leasing makes it easy to spread the cost of equipment and assets over their useful life in predictable monthly installments that protects your cash flow. Leased equipment often comes with maintenance included. Some lease contracts are designed to ensure you incur no out-of-pocket expenses or surprise repair costs. Leasing also allows you to conserve credit sources for expenses such as hiring, advertising, repairs, inventory, or market expansion. If cash flow is tight, it may make sense to lease your office copiers and printers, security systems, video surveillance systems, warehouse equipment, your phone system and video conferencing equipment, and so on. A leased computer can be continuously upgraded, and as fast as technology changes, you may find your 2-year-old computer system to be woefully outdated. There's an old rule of thumb when it comes to leasing versus owning. If it appreciates, buy it. If it depreciates, lease it. I would encourage you to go back and carefully review all of these suggestions and implement as many of them as you feel are feasible for your business. This next area could prove to be a gold mine for your business. This has to do with setting up your corporate structure. We can highlight the major benefits of forming an LLC or incorporating your business by discussing how this would work for a U.S.-based business. But if you're located in a different country, please check with a local professional and see how this might apply to your individual situation. You might find a similar benefit exists, like the one we're about to describe. Well, first, what is incorporation? Well, forming an LLC or incorporating a business means turning your sole proprietorship or general partnership into a company formally recognized by your state and the IRS. When a business forms an LLC or incorporates, it becomes its own legal business structure, set apart from the individuals who founded the business. There are multiple pros and cons to forming an LLC or incorporating, and you should always check with a professional that understands incorporation before you do so. But for today, I want to make you aware of 2 major benefits forming an LLC or incorporation provides. The most common reason to incorporate a business is to limit your personal liability for business obligations. This means if you are sued for business debts or obligations, your home, car, and personal assets are protected. But the second benefit is the one that can put immediate cash in your pocket as a business owner. I'm talking about the difference between an LLC, which stands for a limited liability company, and an S corporation. First, the plain and simple facts. 50 to 60% of all small businesses have no LLC or corporate structure at all. If that's you, set up an LLC or incorporate your business immediately. The remainder that have incorporated are typically set up as an LLC. Now, if they were structured to be taxed as an S corporation, they would enjoy a major tax advantage. Though profit and loss typically pass through an LLC and get reported on the personal income tax returns of owners, an LLC can also elect to be taxed as a corporation. In other words, you can elect to be taxed as an S corp while retaining the structure of an LLC. Now here's why this is so important. As an S corporation, you must pay yourself a reasonable salary, but the rest of your income can pass through your corporation and be taken as dividends. Now in the U.S., we have to pay 15.3% in Social Security and Medicare taxes known as FICA. If you're an employee, you pay half that amount every year on your salary, and your employer pays the other half, up to a maximum income of $137,700. Anything over that amount is now exempt from FICA for the remainder of that year. Now the key word here is salary. Remember, as an S corporation, the tax code says you must pay yourself a reasonable salary. Most accountants agree that a reasonable salary is much less than the $137,700 annually in most industries, with the rest of your income passing through as a dividend. So what's the benefit? You only pay FICA and Medicare taxes, which again is 15.3% on your salary. So as an example, let's say you earn $140,000 this year. If you're set up as an LLC and are taxed as a sole proprietor or partnership, you will pay a FICA tax of $21,068. Electing to be taxed as an S corporation and paying yourself a $40,000 salary, assuming that is a reasonable salary for your industry, you would only pay $6,120. You would save $14,948. Wow. And remember, you can elect to be taxed as an S corp while retaining the structure of an LLC. Check with your accountant and see if an S corporation is right for your business and what is a reasonable salary for your industry. And also remember, this tax savings is not a one-time deal. This is an ongoing savings to your business every year moving forward. But we're still not done saving you money. When you meet with your accountant to discuss an LLC incorporation, ask if you qualify to write off your home office, your office supplies, business meals, your automobile expenses such as your lease payment, or if you own your car, can you deduct for business mileage? Ask about repairs to your car or office, equipment depreciation, and so on. Hey, how about this? Do you have kids? Stop giving them an allowance and instead put them on your payroll. Pay them a salary to clean your office, empty trash, run errands, and so on. As long as these are expenses you would normally have to pay someone to do for you, and they are reasonable for the age of the child and the hours worked, they become legitimate deductions. In the U.S., kids can make up to $12,200 each annually, and they do not have to file a tax return. All of the above are deductions that save you additional thousands in taxes. Now next up, we'll show you how to build your profit and loss statement from scratch. In previous sessions, we've discussed the importance of knowing and understanding your P&L statement and how you can use it to generate immediate profits for your business and do so without it costing you a cent. Unfortunately, many business owners don't have a P&L statement to refer to. So let us show you in our next session how to build one yourself. So until then, here's to your success.